So we had a very big rally last week. The final trade raise of last week was 2.33%. The market was very strong. Airtel was part of the big story that we had last week. The stock market really went hot. We added about 500 billion naira to the total market value. The banking sector came strong, more than 5%. Oil and gas was also very strong. Insurance took a bit of a beating, again, because of the entire market, the regulatory recapitalization program, which the sector regulator, NICOM, is pursuing ahead of June 2020 deadline. Our unlisted market was a little bit in the water, 0.1%. But if you look at the secondary trading, via the FMDQ, that was very strong on Friday, 222 billion naira. So that is quite very big. Temple Ashaju, our business correspondent, will be chatting to us on this. And of course, the news that we got in this morning, that MTN Nigeria is floating 100 billion debut of commercial paper, the first ever by this telco giant. The first tranche, according to people familiar with the story, will be 25 billion naira. MTN says it's looking to support its working capital and general corporate purposes. One of the big things that MTN is pursuing is a financial services. It's gotten a license from the central bank, and everyone is waiting for that rollout. That's one big story. But again, let's check in with a bigger oil story and the Saudi weekend oil facility attacks that set the global markets on edge. Let's check in with Juliana Olayinka, my colleague from our London studios this morning. Juliana, a very quick one. Let's get together into this very story. Hope you had a very nice weekend despite this Saudi oil attack.
Good morning, Bosun. Well, this morning I would say the mood around the city and the FTSE reflects, I would say, global sentiment, really. The stock markets opened 23 points lower. And of course, the only sentiment is oil. Now, those two strikes over the weekend saw about 5.7 million barrels of oil eliminated in one setting. Saudi Stock Exchange, they also lost 2.3% of their earnings over the weekend. And this is going to affect everybody. There are also estimates that this is going to send the oil up $10 a barrel. And for many of us drivers, we could see an increase of 25 cents per gallon at the fuel pumps. So this is a big story. And of course, there has political sentiment. And we know with Donald Trump that political uncertainty has really kind of affected how the city is trading. So it's not good. Having a look at some of the big rises, because of course, even in a problematic story like this, people do benefit. The heavyweights BP, their shares are up 4% this morning. Shell are also up 3%. International Consolidated Airlines Group, those are the big guys that own BA. Their shares plummeted 2.4% because, of course, crude oil is majorly affected and it's really pushed up the price of jet fuel.
Okay, that's as bad as it can get. As always, for every bad news, there are gainers and losers. So that's how the world markets work. But again, I was planning that we'll have some lunch when I get to our London studios. And sometime in summer, I guess I miss summer, but because I'm still going to make it. But it looks like our lunch date is likely going to get scrapped because more than 1,400 UK restaurants are closing down. Insolvency rate is up. So are we still going to have this dinner or lunch, or we should just move it to a breakfast? I don't know. Things are not looking good. Restaurants closing down. Are you guys not going to lunch anytime anymore in London?
Well, we are. And listen, Bosun, you could take me to breakfast, lunch or dinner anytime. The only thing is it's likely that the restaurant will be empty. And we've been seeing this across
just two of us
the
sitting
past
down in an
12
empty
months in
restaurant?
the UK. But there only have been some big names that have dominated. So, for example, the celebrity chef Jamie Oliver, he's 15 restaurant. That was the name of the restaurant. It collapsed earlier this year, but there are thousands of others that have also been affected by this. Before the financial crash 10 years ago, there were many people that were doing casual dining. So, you know, families, rather than just doing it once a week, they were doing it 3 or 4 times a week. That's just not happening at the moment. Of course, Brexit, everything in the UK is blamed on Brexit these days, but it has been blamed that the surge, well, the demise in the sterling has really pushed up prices for restaurant owners. And also as well, some consumers are just not spending that much. They're being a little bit cautious. And some analysts are also saying the rise of those online food delivery surges like Just Eat, Deliveroo, Uber Eats, they are really changing the way people eat casually in the evening. So not good news, but you're not getting out of that breakfast, dinner or lunch easy.
Juliana, I guess at the end of it all, we might just have to do Nigerian meals. So perhaps today, get a way around and find out if Nigerian restaurants are affected by this massive increasing closure of UK restaurants closing down. Maybe we're just going to do some afang soup and a dikaiko, whatever it is, and put it all together and just, maybe that's just what we're going to do. So check for us what's happening to Nigerian restaurants if they are part of this insolvency and closing down of restaurants in the UK. Get that for us. Maybe tomorrow we'll chat to that. Maybe that's where we're going to have the whole team meet together over a Nigerian lunch when I'm in London. But despite the Brexit brouhaha and whatever, Aldi says it's going to spend about £1 billion British pounds to set up at least one supermarket each week over the next 2 years. We thought Brexit is all bad news, but this is Aldi investing £1 billion.
Yeah, this is quite an interesting story, really. Aldi, they are the 5th largest supermarket in Britain. They are really, Aldi and Lidl, which are European supermarkets, they have really, come into the market and affected the big four. And Aldi is somebody that's really trying to come in and take some of the market share that Tesco, Sainsbury's, Morrison's and Asda have at the moment. They have announced that they do want to increase their market share within the M25, which is the motorway that, London sits inside of. They've got about 40 supermarkets. And over the next series of years, they want to double that to have at least 100. What you see at the end of most streets in most communities here in the UK are really kind of tiny stores. Tesco are the big players in that. And Aldi want a chunk. Their market share at the moment is about 3.42%. And they want to increase that. They think the only way they can increase that is by creating these stores. So yes, they have said that they want to create at least 50 stores a year over the next 2 years, and they hope to increase that by 2025 to 1,200 new stores. And this is going to create over 5,000 jobs. So it's a good story in the UK today.
It's a good story. When I found the story and I said, hold on a second, we all thought that Brexit is all about negative news. It's winter, a very big winter coming into the UK. But this is one supermarket creating jobs, setting about 1,200 new stores and what of that. So that's one good news. Let's keep looking for some silver lining in the entire Brexit story. So see you in the afternoon. That will be between you and Chimeze Obiwago on our Business Incorporated. Have a great day. Thank you from Business Morning team here in Lagos, Juliana.
Thank you, Bosun.
We appreciate it. So let's come back home. And of course, what's some of the big stories, the world markets on edge today, as you heard from Juliana. European markets are in the water as we speak. Prices of oil producers like Tulu and British Petroleum rising on the back of the weekend's attacks on Saudi oil facilities, putting a big question mark over the planned multi-billion-dollar Saudi Aramco initial public offering, which some big banks like Citibank and JP Morgan had already been selected. Meantime, gold prices is up 1.27%. Silver, poor man's gold, is beating gold in terms of price jump almost 3% in early trade on Monday. In Saudi Arabia, the stock market itself is negative. Of course, you expect that to happen to the Tadawul stock index. Then, of course, the broader Bloomberg EMEA, that's Emerging Middle East and Africa World Index, was also there about 0.5% early today. Checking the currencies market, you see US dollar index, the DXY, down early today. We're seeing a bit of a correction as we got on the show this morning. Canadian dollar was up on the US dollar about 0.4%. Euro was steady, and you saw the sterling taking a bit of a bite from the big story from Saudi Arabia. U.S. President Donald Trump says the United States is locked and ready to fire on at anyone who's responsible, found to be responsible for the weekend deadly attack on Saudi oil facilities, shortening most of the world oil supply and bringing oil prices to one of its highest level since the first Iraqi war in 1990 and the Iranian Revolution of 1979. So let's check in with our Nigerian markets. Of course, a little bit earlier, we'll give you a hint of that. The banking sector gave the Nigerian market a big jump over the last week. 2.33% was the print at the top of the table. We are heading back to 28,000 if we can hold Wednesday, Thursday, and Friday gains at those levels as we start this new week. But some folks think we'll have a bit of a profit taking as we get into the penultimate week to the Central Bank Monetary Policy meeting of Monday and Tuesday next week. The Central Bank, headed by Godwin Emefiele and the rest of his team, will have a lot to chew on Monday when they meet over decision-making. September interest rates meeting is a crucial one for any central bank around the world. Two of Africa's largest central banks will decide next week. Nigeria on tap. Then, of course, before that, later this week, you find South Africa Central Bank taking its own interest rate decision. We'll try to put everything in the box for you. Let's come back to you after the break and check in with the debt market. Then we'll find a way out. What is our closing bell for today? But, of course, we've got to tee off the market. If you're in the market, you're already aware that close to 700 billion naira is what the market is chasing this week from the central bank side of things. Last week, we finished off a very decent way on the market. Treasury bills took a bit of a breather, but again, the bond market, the yield went up about 3 basis points. That's according to some research analyst reports over the weekend. Let's talk to Bukola Aregbesola, who is a fixed income dealer at Access Bank. She's live to us from FMDQ Exchange Place. Good morning, Bukola. I hope you had a great weekend.
Good morning. I did. Thank you.
Thank you. I did as well. So the market's looking very big this side on the liquidity side, at least looking from the window of the central bank in terms of the interventions and matured treasuries that we're expecting. Bring us up to speed. What's the overarching picture that you have for this week from your side at Access Bank?
So for the money markets, we opened in a negative position this morning because of the OMO auction as well as the FX intervention that took place last week. And for this week, what we have really are a couple of bond coupon payments and then the OMO maturity totaling about 500 billion. And so because of this, we expect to see the money market rates come down slightly. It had closed at above 20% levels last week. The impact...
Please go ahead.
The impact of all of this in the treasury bills and bond market last week had been that we saw a bit of selling in the treasury bills market, particularly on the short end of the curve. And for the bond market, it was relatively quiet. Yes, so that was what the summary of last week.
Yes, so when I saw the Friday trading report from FMDQ and I was looking at about 13.5% discount high on treasuries maturing 10th of September 2020, and I'm saying, hold on a second, is this the new yield curve that we're looking at?
Well, for OMO in particular, which is where central bank has been selling at 13.5, I mean, for me, considering that in about 6 weeks, we had moved from 12% levels to 13.5, and also considering the fact that we have significant OMO maturities still expected into the system between now and December, I think it's safe to say that we could see an increase in the OMO rates.
So there's so much inflows, foreign portfolio inflows into the market. So why are rates still, yields still going up?
Reason is because we're not seeing corresponding demand, particularly from the local investor end into the markets. So for the treasury bills market in particular, everybody goes to the OMO now to buy, to fill their orders, and then we do not see a lot of activity in the secondary markets. It's safe to say market is a bit saturated at these levels, and because of that, we expect that there would continue to a demand for increased rates before we can see more activity in the market.
I'm sure you folks are keeping one permanent eye on next week, Monday and Tuesday, MPC meetings of the central bank.
Yes.
So we are expecting August inflation data tomorrow, Tuesday, according to a revised timetable from the Statistics Office. Are there anything on the fiscal economic front that is in your playbook for the Treasury and, and bond market over this week till Monday, Tuesday?
I mean, for us in the markets, there's nothing in particular, apart from the inflation, which we do not expect to see a spike, but if you think about the fact that this federal government is set to increase the VAT rates, and also the fact that entering into 2020, we expect that the minimum wage increase is going to take effect, and also the fact that the FX reserves have been declining. I mean, these are all of the issues we would expect to influence the decision of the MPC committee next week.
Which of all this in the basket is the most watched item, news or event that the debt market is looking at right now for Nigeria?
Well, it would actually be inflation and the VAT. But for inflation, we would see no significant change or no significant impact is expected as regards activities in the markets, from the inflation end. But if we want to factor in what the increase in the VAT, would do to the markets, it may not be significant, but it's something we're, keeping an eye on.
Why are you interested in the VAT hike to 7.2%?
It's just how the market would react to it, basically. It's not about, it may not be significant, but if you recall, despite the fact that the rate is low in comparison with other African countries, we're also seeing people coming back, in the markets to complain about the impact of it, and all of that. So basically, what we're keeping an eye on is the response, from the markets and the federal government to this, and also the fact that if they've come to increase the VAT rate, it's safe to say they are also looking at other measures, which is something we are also expecting.
We appreciate putting some of these news events and others into perspective for the fixed income market space. Thank you so much for teeing off the market state for us here in Nigeria today. Thank you so much, Bukola Aregbesola, fixed income dealer at Access Bank. From FMDQ Exchange Place. So let's check in with the Nigerian Stock Exchange. It's looking like a very steady, rock and steady Monday morning. The all-share index about 0.4%. If you check that with us right now, Zenith Bank shares is up about 3%. Remember the story around Zenith Bank? Yes, $500 million was the invite that the lender sent out about a week ago and reported back to the market on Friday that he received valid tenders in the region of $392 million that will be paid in cash on or about September the 16th today. Those valid tenders, according to Zenith Bank, have been accepted and that will be paid. Zenith Bank is looking to get out of that $500 million notes yielding about 7.3% before the due date in the year 2022. So Zenith Bank will be coughing out nearly $400 million that it says has been valid tenders that it had received for the principal sum on the accrued interest. That was the story late last week. The market is taking that up right now. Zenith Bank shares 2.89% above 19 naira per share, heading towards 20 naira per share. Nigerian Breweries share is also up. Cement Company of Northern Nigeria is making a gain. Access Bank is up about 3.4%. USC is also up 3.03%, heading towards 7 naira per share. And you know the story around USCN spinning off UPDC, that is his real estate company, trying to create 3 new companies, USCN, UPDC, and UPDC Rates, which is real estate. Unbundling UPDC, trying to clean up the books, looking to raise about 15 billion naira to clean up the books of UPDC and set it on a new footing. All of that we unpacked for you last week, and that is putting the share price of USCN on a solid footing early today. Our all-share index about 0.39% in the grey territory. 2:30 this afternoon, join 100-year-old octogenarian Pakitola Williams as it closes today's trading. A very significant day for the Nigerian market, the oldest surviving member of the Nigerian stock market and the only surviving signatory to the Memorandum and Articles of Association that set up the Nigerian Stock Exchange about 60 years ago. That's about all for today on Business Morning. I'll see you again tomorrow, Tuesday, the 18th of September. Have a great day, everyone, and a great week ahead. Goodbye from Lagos.